Morning. Welcome to once again the White Label Resources spring budget. In this occasion, I'm joined by two very familiar faces to our regular viewers now, Alex Reynolds and Mike Ball. And interestingly, it's a warm, sunny day out there. It's nice and bright for all of us. I'm not entirely sure everybody feels the same way about where the world's going at the moment, and economies. And we're here obviously to have a chat about the spring statement. I don't think it was any surprise to anybody that it was a little bit more low key. There was not so many shocks and surprises in there for us. But as always, there's a bit of devil in the detail, and it's very much part of the current government's plan to have one major fiscal event each year. And whilst I think some people we spoke to were hoping that there'd be this great big U-turn on certain policies, but unsurprisingly that didn't happen. But it's been really quite interesting, and I think we've obviously spoken to a lot of our customers and clients, and I think it's useful just to reiterate to our viewers that as a group, we have our accountancy and corporate strategy division. We also have our legal division, and we also have our finance, banking, and insurance division. So we've got a big group of companies and advisors that are making us realise that what's actually happening at the moment is probably quite a large shift when it comes to how you actually behave as a business. Some of those more well-trodden paths, if you like, the strategies that people might use, things are changing, and of course. You talk about budgets and everyone hits, and quite rightly so, what are the tax reliefs we should consider? Are we maximising this? What do I need to be aware of? But a lot of the feedback we're getting is never more so has there been a time to actually benefit from all of your corporate and professional advisors and really have a joined up approach. Of course, we'll tell you that that's great because that's what we deliver. But no matter who you work with, it's not just about have I maximised X, Y, and Z? For me, you think about as a business owner, get some relief on pensions, let's say, and that's good because there's a bit of tax relief in there. I'm investing in my future. And there's a fairly clear route to go down. It's nice and vanilla, but that's been chucked on its head. All of a sudden, that's not necessarily a wise thing. And I think that you talking to someone, I think Alex, about all of a sudden. Actually, what I thought might be a good strategy is out the window a little bit.
As you say, it's a very well-trodden path. You have a business, you have surplus profits. What's the most tax efficient thing to do is put money into pensions. You get the tax relief, you get the tax-free growth in your pension. It's outside of your state for inheritance tax. You have a commercial property, you're going to buy a commercial property or invest in commercial property. Let's put it into a pension. The rental goes into there. You still put a great contribution there. You're building yourself a nice pot ready for retirement. Well, that kind of 20, 30 years worth of sound advice is actually not say it turned on its head, but it's now let's take a little step back.
Is that the right way forward?
And let's have a look at is that the right thing to do? Because I'm not protecting it from potential IHT issues in the future where I've got an asset I might have to pay tax against. I don't have the cash or my state to do it.
Yeah. So, and I think that's jumped out massively in so many conversations we've been having. Is let's take a deep breath here, because I know, Mike, a lot of the stuff you've looked at is, well, hang on a second. Yes, there's some commercial and tax and financial opportunities, but let's get our act together on shareholders agreements. Let's understand the structure of our business. Let's make sure we've got the right insurances in place, because, as you say, cash isn't always going to be there for someone to pay out on a death duty.
And in the past, for example, we talk about commercial properties. We put a commercial property into a pension. It might just be that pension might just have that asset and some rental income and quite a reasonable value. Well, where does the money come from to pay for that extra tax?
And perhaps I think we'll pick up on that point as the conversation goes on, because I think that's really where we've got to reshape our own view. And as business owners, there's so much more that's required, and it's about understanding that these strategies, and people talk about tax planning, or they're actually part. It's got to be part of a joined up thing. It's not just about compliance; it's about everything else as well.
But if you think about strategic advice historically, so all the clients, high net worth, super high net worth companies, you're looking at business life cycle, and historically, up until October, you could get away with giving piecemeal advice. You could look at pensions and say, but your corporation tax again. But, and I know it sort of all relates to inheritance tax, but if you think about it, everything we did was getting to a point where historically the asset you'd grown for 10, 20, 30 years in your estate was tax free. Right? So you genuinely, we've not really had to advise on inheritance tax really if you've owned a company. So, in my experience, 20, 30 years, right? Now the end game absolutely dictates day one onwards, because now more than ever, you've got to have this integrated approach to make sure that, you're dealing with inheritance tax, but what are you doing to mitigate that risk? Well, you're going to look at extracting more funds quicker. You're going to be spending it on family. You're going to get it down the generations quicker. It's probably going to be more important that you've got a really strong second tier management team, because it's going to prompt people, I think, to sell the business or grow it to at least have value to either sell or get down the generations. It's going to be more important to have life insurance, key man insurance, shareholder protection. All of those wraparounds that before we've not had to worry about now become really important, and they become more important today, not in 20 years' time. So it's one smallish change, but massive in our environment. It's massive.
It's huge, yeah. And I think I know, Alex, we were sort of going through some of the key detail numbers, and I think we'll obviously be supplying them if anybody wants them. Of course, we've got them in some of our digital distributions and what have you. And as you say, Mark, it talks about, okay, there's all these increases which we've all focused on as being painful. They're really causing us a challenge, and there's no point. It's not no point worrying about it. It's perhaps the wrong phrase, but there's no point getting hung up because they're happening and they're coming. So as always in our advice is, right, okay, well, let's look at a corporate strategy and commercial strategy. But now, as you say, it's not about looking at the and look, what are we going to do about the national insurance increase? Well, we might have to put our prices up. We might have to freeze our recruitment. We might have to freeze pay rises. They're all very real things. They're the reactionary things that I think have to be done. And as business owners, we know what we've got to do to protect, and we can't urge enough focus on that. But we should say more than ever, there's things that we need to be putting in place now. So there's a lot of things that are going to be happening in April next year. And actually, now is the time to take a deep breath and at least be aware of what decisions you need to make, be aware of the implications. If we looked at, probably the best way is looking at a standard scenario. So, you think about, what would a business be today, 12 months ago, the business, turning over £2 million, making 200 grand a year profit. There's, as well as all the advice that we've been giving, our customers and associates over the years, there's some very, very straightforward things. But as you say, now you've got to start thinking completely different, haven't you?
Yeah. Well, you look at that scenario. Let's say you're making £500,000 profit. My mental maths isn't that good.
That's just because you always make more money than I do. I think that's that perspective.
So let's say you've got a business earning £500,000, and for 100% business property relief, you're paying no tax on, your estate's paying no tax. Now you're paying inheritance tax on the first £1 million. So you've now got, give or take, £1.5–2 million bill. Now, because you're making £500,000, they're going to value the business at £2–3 million. If you're not generating cash, how's your estate going to pay that bill, right? And then you look at farmers, just to compare them side by side. What you generally get is people that are sort of super wealthy on paper, but not cash generative or profit generative. So you could have farmland of £6, £7, £8 million worth of land that's making 100,000. Well, how are you now going to pay a tax bill of £2–3 million when you're only generating 100? So You know, whereas before you could not make decisions and get away with it. You know, the tax bill that's coming for the family now dictates that we've got to do something. And there are methods and strategies that are completely vanilla that you can start passing the value down, or passing the capital value down, maintaining income, extracting income, which you know now is hugely relevant. But you've got right now, and you say, you know, things coming in April 26th, they've already got anti-forestalling measures that if you make the decision after October last year, you're already hit with the £1 million limit. So yeah,
I think that's a really interesting point. We just pick up on that. Lots of planning to be done, and lots of things we can do. But those anti-forestalling measures are hugely significant, not only because the horse has already bolted, that's happened, but also because that should affect our thinking about possibilities going forward when we start to talk and more over the coming months about the possible further changes that the government are going to bring in. That anti-forestalling measure, which effectively just means the legislation doesn't happen for a period, but as of now,
it already has.
As of now, if you want to work in line with current legislation, you'll be held to account against future legislation. So that's a really key thing when we talk about strategically looking forward, about trying to second guess what might be happening out there to make those decisions now.
But don't you recall when we had our webinar at the October budget, that there's the Labour MP somewhere in North had already transferred his land.
He's transferred
the family's land had already been transferred down the generations before this anti-forestalling measures came in. So kind of gives you an indication of these measures are there to stay, and you need to be starting.
Gives you an indication of how fortunate some MPs are in their strategic vision to see that ahead of the game, of course. But you're exactly right. And it keep bringing in and
on that particular point, isn't it interesting that historically, I think planning would have been put in place informally, right? So we know, particularly in sort of farming arena, where businesses have been sort of passed to children and grandchildren informally, not documented and that sort of thing. So, and again, historically, you wouldn't have had to worry about it if they'd have only documented it, 5, 6, 7, 8 years ago. That would be a massive help for where we are today. But again, you don't have to worry about it. So it's not about foresight, but getting the proper advice and putting things in writing quickly helps.
And I think that's right. And I think that's a message. Obviously, we're going to try and continue to push forward. But as we've talked internally around in our group, and we've got our the corporate lawyers involved, and we've certainly had some really interesting input from the banking and insurance side of our group, is just do it. Think ahead. Let's plan for it. We do put off a lot of things because I'm busy and I've got this to worry about, I've got that to do. But actually, it's really, really important that we start looping all of these requirements as a business owner. If we make these tables and we're brilliant at making these tables, let's really make sure we're also good at getting advice around running the actual business and the pieces that perhaps aren't second nature to us, but that piece of planning. Mark, you were talking the other day about some of these IHT issues and the structures, and you were talking to me about some of the insurance policies that people can start to consider. And I think, and we'll go on to that, but I think it was interestingly really encourage people not to get too carried away, because I think also there are some people in the professional community who have seen an opportunity to upsell a load of insurance policies. Well, you need all of this, you need all of that, you need all of the other, and that's absolutely not the case. But you can't let that not be the case. I mean, you miss out on what you need to do. So we always talk everything we discuss in these arena, it has to be bespoke. And there's no one size fits all. So I have to do it bespoke to everybody's requirements as business owners. But it's quite an interesting.
Well, you look at from a silly angle, you look at Instagram and you look at TikTok with a minute. How many people are pushing relevant life, and relevant life insurance for directors because you can get it tax free in the company.
Yeah.
Well, that's true, but it's just an insurance block, isn't it? Think hard about where you are. If you're a 40, 50-year-old guy, typically, or woman, but typically, you've got one person running the company, and if they're that key, historically haven't taken insurance. Well, if mom and dad is running the company and they're no longer with us, how historically, when we didn't have the tax bill, you've been muddling through and achieve something, you don't have that luxury anymore.
Yeah.
The key man insurance starts to become more important. Yeah. Relevant life, which is a relatively cheap insurance, becomes important to get you the value on death, right?
Yeah.
That's why the country wants a tax bill or fund the life of whoever's remaining. There's all of life insurance, which is a bit of balancing act depending on how old you are. So whole of life insurance will insure you effectively for inheritance tax bill.
Right. Yeah.
And it's a trade-off between cost and time. But some of those are good value depending on when you pick them up. That will cover your tax bill and take that worry away for the family. So yeah, they've all become massively important.
Yeah. Yeah. And I think again, in case everyone's confused about the theme, it's all about looking broader at pieces of your business. And if you can start to take those pieces of pressure off, you can then start to think about, you can get back into a bit more of the future planning then and say, well, actually, what do I need this to look like? And
well, we're talking about dying in inheritance tax, right? But where we started was that is driving what we think is good practice, right?
Yeah.
And what is good practice is building a business that isn't dependent on the one person at the top.
Yeah.
That is a sum of its parts. If it's a sum of its parts, it's worth a lot more.
Yeah.
And gives you options.
Yeah.
Right. And if it gives you options, then what does everybody want at the minute? Particularly people like Jaguar Land Rover and Donald's Donald's salads. You need options, right?
Yeah,
and you need to be fleet-footed, and you need to be able to be flexible to deal with. Well, actually, the death taxi bit, I think it's going to prompt people needing to look at that sort of thing.
Yeah.
Quicker than historically they have done, which no longer becomes about death and taxes. It becomes about just good business practice, right?
Yeah, and that's where the loop comes back in, isn't it? And I think one of the big messages we always try and talk about and push out there is that don't think that method or that strategy is only suitable to the great big companies out there, that the big global corporates. The principles of planning, the principles of restructuring and having that focus, they're valid to every single one of us. Yeah. And it's just how we, from a bespoke approach, look at it. And as you say, right, so now we know there's a bit of a risk on the end piece. How do we bring that back and start looking at our strategies?
Yep. And things like, we weren't spoken for a long, long time, gifts out of surplus income.
Yeah.
So how do we get it out tax efficiently? How do we gift, which effectively sits outside your estate? How we gift that down the family more often and in bigger chunks. There's lots of stuff we do.
Yeah. It might be useful, just Alex. There's a boring thing coming in. We need to think about as business owners. Which will be straight over to you.
Thanks for that. Yes. So one of the things that's been on the horizon for a while is making tax digital. What's coming in 2026 is for self-assessment, income over £50,000. We'll have to do basically quarterly filings or updates to HMRC and run onto your normal tax return at the end of the year. You have to do that digitally. That's what I got make that digital. So yes, I know it seems a little bit, it's 12 months away, and the first quarter will be a little bit longer than that, but people need to start looking at actually how do I digitize my records to make sure that we comply with that, because I think a lot of people can get caught out with that.
Yeah. Well, I think unfortunately it's one of those things. The whole making tax digital has been dragging on for far too long, from conception.
I think it's 5 years.
So it's eventually coming. So the can's been kicked an awful lot, but
and also, which I didn't know, things like if you've got rented properties or rental assets, and you've booked them through a system, then the agent will be reporting to the revenue directly.
Yeah.
So not that you lose control of that, but even more important, to be able to mitigate the cost and the tax burden on that.
I think things like that again, those sorts of things. There's lots of people, and we talk about it, and lots of people have perhaps built a small property portfolio, perhaps got it linked in with their pensions or whatever. So there's lots of things to change about that. But as business owners, sometimes they're little businesses that might be sat on the side of our core business. So unless we get those pieces right, that making tax digital, understand that piece of legislation engagement, you might find that you trip yourself up. So please do make sure
I would
you're
point out as
looking
well,
at that.
2027, that 50 grand becomes 30 grand as well.
Yeah.
So again,
Keep-
that doesn't affect me, but it might do in 2027. Again,
Yeah.
it seems a long way away,
Yeah,
but these things come around quick.
yeah, absolutely.
And historically, just as an aside, but while we're on the subject, if you do have a portfolio of properties, be it commercial, residential, and it's a business, and would benefit by that being a corporate structure, there are ways to incorporate that if you qualified it, that
Yeah.
I'm just going to say over words, but mean that you get relief to stamp duty and capital gains tax.
Yeah.
There's lots of stuff
Yeah.
to do if we're talking about it earlier.
And that's the key, isn't it? So as always, and we do use this an awful lot in all of our discussions with some of our customers or around the businesses. First things first is get it out there and get the conversation going. That's the starting point, and that conversation is about the whole piece. It's about where you're looking to go to, where what you're looking to do with the business, your team, etc. But also it then makes it very, very bespoke and unique to you as a business. Your situation, two businesses may look very, very similar, but the advice is often different because you can't have, and we see it. I think it's Dan Needle, isn't it, that's doing a lot where he's talking about some of the schemes that have been marketed out there and this that and the other. You can't just do one size fits all. You have to, there's a very real reason we don't market, because what we try and do is focus on our strengths as a business and as an organisation, as professionals, and then understanding uniquely what is appropriate to you as our customers, and then working it through there. And the big thing we would always say to you is, look, have a real think about where you want to be. It does loop nicely into fact, as we like to in our webinars. The first 10 people that communicate after this webinar will get a free 30-minute consultation with anybody within our group. So that's a legal question, accountancy, tax, banking, insurance, you name it. So that's available for you, or you can just email Alex and he'll pick it up and he'll run with all of the sessions. But it is useful because you need to really understand your position. Never has there been more appropriate to say, don't trust your mate down the pub who says, but you should, I know. That doesn't work. It really doesn't work. Whether it's us, whether you have different accountants, different advisors around you, please spend the time talking to them, because we're now seeing this shift, and it's not going away. That yes, the numbers are vitally important, but it's the whole piece that we've been talking about for a couple of years now.
Yeah.
That really needs to be brought together. And I think as a nature of that, we will obviously continue our webinars, but we will be bringing in additional faces to complement the lovely faces you see before you. So that may be someone from our legal team or finance or insurance or whatever. So please do contact us and let us know if there's any particular subjects you'd like to discuss, understand and focus on. We can introduce them. We will in May be launching a little bit more formally our Entrepreneurs Exchange podcast, which will involve interviews of our existing customers, some people's interested in these chaps and others, but will also help us focus on some key areas on an ongoing basis of running our businesses. Again, reiterating that message that this is about strategy. This is all about looking forward and never thinking it doesn't apply to me or I can't have that benefit because I'm not this, that and the other. Absolutely. There's a reason we've got such expertise from large corporate organizations, expertise in running SMEs. That's about how we bridge that gap and bring forward some of these strategic pieces that understand the legislation, so you don't need to understand the detail of it, and how we can best utilize tax legislation, commercial principles and strategies to benefit your business. So thank you as always, chaps. Good to see you both, and I really appreciate you spending a bit of time today. That's been really good. I hope you guys out there have all enjoyed it. Please do make use of the free consultation. Please do feel free to contact any one of us. We will be sending a note out to reiterate contact details, etc. And also, please do feel free to contribute to any of these future webinars or the podcasts that we will be launching. If there's any topics, subjects you want to look at, we'd be delighted to assist you with them. Outside of that, enjoy the sunshine. I think it's going to be lovely going forward for the next few days. So have a great day, and we look forward to seeing you all soon. Thank you. Bye bye.